Hey everyone, it is Jay Soloff from Investors Alley, and this is our options trade of the week. We're looking at Market Chameleon's unusual options activity sorted by volume. So you can see where most of the heavy action is. Oil, no surprise there, given the huge up move in oil the last couple days. Luckin Coffee, company that's been in the news for fraud, essentially, has lost a bunch of ground. So, this is airline related stuff, biotech, cruise line. This is exactly what you would expect given the news. So I'm going to look at Zoom, which is, of course, the online video communication, group communication software, that cloud software that everyone's been using to talk to each other. Kids are using it to talk to their teachers, and workers are using it to communicate with each other, and just generally speaking, a company that is very much thriving based on what's going on with the virus as people are stuck at home. So looking at some of the trades, this thing's been flying. It's up to 128. It's been as high as 164 and as low as about 60. So obviously it's been quite volatile. Let's look at some trades. And it's always tough to trade a stock that's basically in vogue, because these are the stocks that that don't always adhere to the fundamentals. Now, there's a lot of good reasons to own Zoom because of all the people using it, but on the other hand, you have a valuation that can be really high, and so it's a little bit hard to get the true gist of where it should be. You can see pretty mixed bag calls and puts. So what I've noticed here is April 9th, which is a week from today. You can see a lot of looks like people selling puts, 110. So with the stock at here at the 127, a lot of people selling the 110 puts. I think something like that, with you have a lot of volatility. Put premiums are really high, so they're selling these puts for $1.75, which is a lot of premium for something that's pretty far away. Now, I wouldn't necessarily do that if it's a cash secured put. It's that's a lot of money you have to have in your account to own something that's this expensive. If it's a margin trade, then obviously it's more risky because you have margin. So maybe doing something like a put spread. So let's look at that. Here you can see Zoom. It's obviously been on a roller coaster here, way up, now back down, but still quite a bit higher than it was. So this is suggesting selling puts around here for the next week, which seems like a reasonable trade. But instead of doing something like selling the 110s for 175, maybe you sell the 110. Let's look here. Sell the 110 and then maybe buy the 105. So now instead of making $1.75, you're making 60 cents, but you don't have that unlimited. You're only risking $440 per spread, as opposed to unlimited if this thing were to drop way back down. So of course you don't have to do, you could do a wider, get a dollar credit, and then you're risking 900. So there's different ways of doing this, or you could do you can do closer, a lot closer, and then maybe do a narrow spread is another way to do a trade like this. So here you're getting 55 cents for the 121.18, and you're only risking 145, but then you're a lot closer. This is at 128 and you're at 120. So different ways of doing these vertical spreads, but just an interesting trade to do. There probably is a floor on Zoom, but just because of how many people are using it and the incredible growth. But then what should the valuation be? Well, we need to start seeing some financial numbers. So it's a bit of an interesting dilemma, but kind of a fun stock to trade options in if you don't mind taking on some risk and seeing a lot of volatility. And this is the sort of thing I talk about in my services and my education products. There's links on the screen. So if you want to learn more about this stuff, check out any of these links, and I will be happy to work with you.